During your journey to homeownership, you will likely be deciding between an FHA or conventional loan. Which one is right for you? I'll explain in this video. First, let's focus on the FHA loan, which stands for the Federal Housing Administration. Keyword federal. It's a mortgage program that allows individuals the opportunity with low credit history or a troubling credit score in the past, or just lower to moderate income levels, the opportunity to become a homeowner. So, if you have a 580 credit score, you only need 10% down payment saved, or if you have a 620 credit score, you only need a 3.5% down payment saved. So in numbers, if you have a 620 credit score, you'll need about a $12,000, $250 down payment. Now, with an FHA loan, it is possible to receive up to 100% of your down payment as a gift if you have a family member or someone that's willing to help you get to that down payment amount. Or it's possible to utilize different down payment assistance programs if they're available at the time that you're applying for the mortgage. Now here's the key with an FHA loan. If one individual has a 620 credit score and another person has a 670 credit score, they receive the same terms if they're all applying at the same period of time. There's no major fluctuations in interest rates or terms. Everyone who meets the minimum requirements of an FHA loan receives the same benefits at the same time that they're applying. Now, another perk about an FHA loan is sometimes loan programs require you to have a minimum of a 2 to 3 month emergency fund saved up in your bank accounts, which is still a good practice to have, but an FHA loan does not require you to need to have that amount saved. In fact, they don't have any sort of requirements regarding how much money you need to have in your savings other than your down payment amount, and then you'll need to come up with closing costs unless you negotiate the seller to pay for closing costs, or just paying for the home inspection, which is typically, depending on what you get, between $400 to $600 for the general home inspection. Now, there's also a little bit more flexibility in your debt to income ratio under an FHA loan, as it is possible to qualify if you have a debt to income ratio of 56%. But wait, there's more. If you have a Chapter 7 bankruptcy on your records, it's possible to be eligible to qualify again after 2 years. Or if you have a foreclosure on your records, then it's possible to be able to qualify again after 3 years. Both are shorter year requirements than the conventional loan, which I'll get to in a little bit. So these are the main benefits regarding the FHA loan. Now, what are some of the drawbacks? One of the drawbacks in FHA loan is you are required to have private mortgage insurance, which if you're putting down a down payment of under 10%, then this will last for the entirety of the time that you have the loan unless you refinance or pay off the loan. But if you're putting down a down payment of 10% or higher, then after 11 years, you'll be eligible to have your private mortgage insurance waived. Also, regarding private mortgage insurance, part of your closing costs would be the premium mortgage insurance upfront fee of 1.75%. So in numbers, if you are paying for a house for $350,000, then you'd need about 1.75% of that fee would be roughly $6,100 or a little over $6,100. That will be in addition part of your closing costs. So you can only have one FHA loan at a time, but there are some limitations to the type of homes or condos that you can purchase with an FHA loan. So for one, you cannot purchase a house that was purchased within the last 3 months because of the 90-day rule under FHA Housing Administration. Or if you are looking to buy a condo, you can only purchase a condo that's specifically FHA approved, and there's a website that shows if it's FHA approved. So there might be 20 condominiums for sale in your price range, but out of the 20, there might be 8 that are specifically FHA approved, and these 8 are the condominiums that you can look at and purchase with an FHA loan. Also, if you're looking to buy a house, it can be ugly cosmetically, or it might need some work done cosmetically to make it more visually appealing to your liking, but the house has to be in decent and good condition. It can't need any major work done with the house, such as a new roof or foundations in poor condition, or it doesn't have the basics like heat or running water. It needs to have these basic elements to the house, but it can be ugly cosmetically if that's what you're looking for. So those are the main perks to FHA loan and also the drawbacks to an FHA loan. Now, who should get an FHA loan? If you have troubling credit history, or if you have a bankruptcy or foreclosure on your records, or if you have low to moderate income levels, or if you're just looking to purchase your first house and get into the game of home ownership, this could be a good option for you. Now, let's talk a little more conventional. The first main difference between an FHA and conventional loan is FHA loan is backed by the government. A conventional loan is backed by private investors, and they follow Fannie and Freddie Mac guidelines. Now, you can have more than one conventional loan at a time. So if you're looking to purchase your second home or investment properties, then this could be a great option for you. Also, the minimum credit score requirement is a little higher with the conventional loan compared to an FHA loan. So with the FHA loan, it's possible to qualify with a 580 credit score if you have a larger down payment amount saved. But with the conventional loan, you need to have a 620 minimum credit score, and there's some more fluctuations in your interest rates as well. So down payment can vary between, typically the lowest I've seen is 3% or 5%. So if you have a down payment of 5%, you might get better terms than the person with 3% down payment saved. 10%, 15, 20%, because there are more fluctuations in your terms, such as your interest rates and whatnot, depending on how much down payment you're putting down and your income and credit score. I highly recommend sitting down and speaking with the lender and going over numbers and your situation in detail with them, and then figuring out if you're going the conventional loan route, what is the minimum down payment amount that you can afford. That will also give you the attractive terms that you're looking for as well. Now, one of the main differences and benefits to a conventional loan compared to an FHA loan is there's a little bit more flexibility in your private mortgage insurance. So first, with a conventional loan, it's possible that your payment might actually be less for private mortgage insurance compared to an FHA loan if you have larger down payment saved and a stronger credit score amount. But also, here's the key. After you get to 78% of loan to value, then you're eligible to have your private mortgage insurance waived, unlike an FHA loan where you have to wait 11 years if you put down a down payment of 10% or more, or it lasts for the entirety of the loan with the FHA loan. Once you get to 78% of loan to value, you are eligible to have your private mortgage insurance waived with a conventional loan if you go that route. So in numbers, for example, let's say you're purchasing a house for $350,000 and you're putting down a down payment of 3%, which is $10,500. Well, $350,000 minus $10,500 is a loan amount of $339,500. Let's say 9 years down the road, you've been paying your monthly mortgage payment for 9 years, and now your loan amount is $273,000. This is 78% loan to value, and now you can save in the long run without having to worry about your private monthly mortgage insurance payment, and now you actually have lower mortgage payments. That's one of the main benefits to a conventional loan, and this gives you extra incentive to want to put extra money down towards your monthly mortgage payment from a month-to-month basis, so you get to that 78% of loan to value quicker. And if you want to avoid paying private mortgage insurance in general, with the conventional loan, if you put down a down payment of 20%, then you don't even have to worry about private mortgage insurance. Now, those are the main benefits to a conventional loan. Now, what are some of the drawbacks? First, there is a little bit less flexibility with the conventional loan if your numbers are tight compared to an FHA loan. So regarding your debt to income ratio, lenders like to see your debt to income ratio be around 43% or lower, but it is possible to qualify with 50% debt to income ratio under conventional loan guidelines compared to 56% with the FHA loan. So if your debt to income ratio numbers is tight, then you may want to look towards FHA loan and discuss options with your lender regarding FHA loans. Also, if you have a Chapter 7 bankruptcy on your records, you have to wait 4 years compared to 2 years with the FHA loan. And if you have a foreclosure on your records, you have to wait 7 years compared to 3 years with the FHA loan. So if you have a foreclosure or a Chapter 7 bankruptcy on your records, you also may want to look and go the FHA loan, as your timeline is less with the FHA loan compared to a conventional loan. But you do get more options to look at regarding condos and houses. Unlike an FHA loan, the condominium does not have to be FHA approved with a conventional loan. And you can buy fixtures with the conventional loan. You don't have to be limited to just cosmetic fixtures or homes in perfect move-in ready condition with the conventional loan. So it just all depends on the type of property you're looking at regarding what route you want to take between a FHA or conventional loan, and also your numbers and your situation. Now, who should get a conventional loan? Now, typically speaking, if you have a higher credit score, let's say 720 or higher, and you have a larger down payment amount saved, 5%, 10% and higher down payment saved, then it might be worth it to you to pursuing the conventional loan route. But again, you'd want to sit down and crunch numbers with the lender so they go over based on your specific situation. Those are the main differences between an FHA compared to a conventional loan. If you found this information of value, be sure to share this video. If you have any questions or would like introductions to a lender or any questions in general about the real estate process, feel free to send me a message. Thanks for watching. I'm Dominique May, your local realtor, and I look forward to hearing from you.